So glad to have Gavin Thompson, the Vice Chair of Energy for Europe, Middle East, and Africa at Wood Mackenzie. Thank you so much for your time and thank you for being here.
Pleasure.
So, Wood Mackenzie has urged Nigeria to remove obstacles to production growth. What are the top reforms you believe Nigeria must implement to unlock upstream investment? And what are the likely short-term versus long-term impacts of those reforms?
I think firstly, the government is doing a good job. So the industry reforms in the Petroleum Industry Act in 2021, subsequent improvements in 2024, 25 are starting to bear fruits, if you like, particularly around onshore and shallow water, non-associated gas, and some of the deep water development. So progress is already underway, but more can be done. Firstly, we'd like to see more licensing rounds, both for greenfield exploration and discovered resources. I think we can see more progress around building out gas pipeline infrastructure, midstream infrastructure, and access to that, and potentially some tweaks around gas pricing to incentivize upstream investment, as well as the continued efforts to develop NNPC as this fully commercial national oil company. So those are policy terms. Beyond that, as we look further forward, Nigeria has ambitions to increase production to 3 million barrels a day. It's currently less than 2, so there's more to be done. And as always, a lot of that is regulatory, it's fiscal, it's getting the terms right and remaining as competitive as possible. So really positive steps and just a little bit more to be done, we think, for the industry to sort of convalesce around the Nigerian upstream opportunity.
And Namibia has emerged as one of Africa's exploration hotspots. How do you assess the transition from exploration to development, especially in relation to infrastructure, financing, and host government policy?
Yeah, it is a hotspot, and we're going to be talking about it a lot this week. And I think the next 12 to 18 months are going to be really critical. And you make the right point. It's a transition from the big discoveries that have been made in the deep water to getting that production online. So if you take a project like Venus, it's very deep, it's 3,000 plus meters of water, it's remote, there's not a lot of service industry infrastructure to develop that. So a lot of focus on getting it right. And if you look at the project itself, as well as being very deep and remote, it's quite gassy. It's about 30% gas, and about half of the wells for that project are going to be re-injecting gas into the reservoir so that there's no flaring issues. The fiscal terms are pretty good. I think, again, 1 or 2 tweaks can always be made just to accelerate investment, get the capital flowing, and get the revenue out of the project. I think there's still areas where operators would like to see some adjustments. On the ground in Namibia, everyone talks about local content, defining that into law. What does it mean? I think also we hear companies saying that we'd love to see a fiscal stabilization clause so that we can build with confidence. And that will come up again. And also, the gas law and gas planning, how does that fit into the longer term development? Initially, that gas is going to be re-injected, but it's money, right? It's got a real value. And so how does Namibia monetize to the maximum scale its natural resource, both oil and gas?
And Woodmac's outlook forecasts that African upstream capital expenditure is stabilizing at about $40 billion annually, with gas and LNG-led developments being especially active. What risk could derail that forecast? And which countries or sub-regions are best positioned to attract that capex?
Yeah, it's a great question because, when you look at fiscal terms around Africa, particularly sub-Saharan Africa, they're really designed for oil. And gas hasn't been fully addressed yet. So as I mentioned with other markets, maximizing the value of gas through the right fiscal terms, being globally competitive, because we're seeing strong future demand for gas, LNG and FLNG projects moving forwards, but really making sure that African countries remain globally competitive. Too often what we see is gas as a sort of secondary thought, and companies are sitting on a gas resource, but they're not monetizing it. So action to get that moving. Now, when we look at LNG, great demand story around the world, Problem is, it's an even stronger supply story around the world. We could see 5 US projects take a final investment decision this year and more to come. So there's a lot of supply coming into the market. African resource holders, they don't want to miss that opportunity. And so, tweaking the terms, getting the regulatory and the policy environments right to lock in that investment, we think is really key. Mentioned Nigeria is moving on that. Angola is doing something similar. Various other countries in West Africa again. But I think taking a step back, looking at the global LNG market and saying, we've got to be ultra competitive here. How do we achieve that? We get the best terms, the best policy, the best regulation, and we attract the best companies.
The Republic of Congo is advancing its gas master plan, supported by Wood Mackenzie. What insights does this experience provide about the opportunities and the challenges that new gas players will face in Africa? And how might the lessons from Congo's approach inform other emerging producers seeking to monetize their resources and attract investment?
Yeah, no, I think when you see a country in Africa or anywhere around the world making a gas discovery, and this is in markets where there's no gas infrastructure, no gas end use, what you typically see is a bit of a rush to say, let's monetize this resource. Let's get it into a pipeline or into a ship and see some revenue. That's fine, but it doesn't address the long-term need for planning and maximizing of the ultimate recoverable resource. So what will happen is a company will say, great, I've got a resource, it's low cost, I'll monetize it. What governments need to do is say, also that's great, but let's think about the broader ecosystem here. Let's put in place the right policies and frameworks for the long term. Let's think about how we develop infrastructure that we might allow third parties to access in the future. Let's think about what end use sectors we want to build and develop, whether it's power or fertilizer or other industries. Maybe create a gas aggregator that would allow you to have pooled pricing for gas, for example. So the lowest cost gas might effectively subsidize some higher cost gas, but the consumer knows what they're going to be paying in the future. And countries like Republic of Congo, when they do this, when they do their homework, investors say, we like this. This is giving us confidence, rather than a sort of knee-jerk reaction to say, we made a discovery, let's monetize it. And I think that ultimately master planning is about saying, let's build with confidence for the long term, rather than just try to get the money as quick as possible from a single resource. It's the way to go, and we would certainly recommend it.
And given the recent slide in solar deployment in Africa from about 4 gigawatts in 2023 to 3.5 gigawatts in 2024, despite the rising electricity demand, what are the systemic challenges slowing down renewable deployment? And what role does financing, policy instability, or grid integration play?
Yeah, the statistic you mentioned is pretty depressing, because what everybody wants to see is increasing access to electricity. So when renewables, for example, cleanest source of power, when we see a dip in the rate of growth, we need to ask ourselves why. And particularly when renewables costs, solar panel costs, for example, have continued to fall globally. Why is that? Look, a lot of that is about financing. It's about countries, companies, financiers saying, what return am I going to get here? And where can I get my best return? And oil and gas has been outperforming cleaner energy. It's a reality, but it's not the exception to the rule. We can see markets where renewables are getting attractive off-take prices. We see the growth of micro and mini grids, which are really important to deliver electricity into communities without having to build out expensive transmission and distribution systems, which typically are pretty expensive and don't make exciting returns. Looking at multi-source financing, really pushing hard on the multilateral, saying we need more because we've got the technology, we've got the market, but we're being held up by a lack of available finance. So there's a lot to do. I don't want to see that growth number going down. It really needs to start increasing.
Yeah. And just, my final question, we're here at African Energy Week. Wood Mackenzie is a silver partner. What does this partnership represent for WoodMac, and how do you see AEW as a platform for sharing insights, engaging with stakeholders, and shaping the future of Africa's energy?
It's a really important partnership for us. It's a great event. Everybody's here. That's really important. There's a positive mood. You talked about Woodmac's number, 40 billion per year of investment. We think it can be higher with the right adjustments to policy and the right frameworks, and it should be higher because it will provide more access to energy for more people. What it means for us, I think, is being a part of the conversation. And that's everything from exploration through to production, through to gas markets and end use, and looking at energy holistically. Where are the opportunities? What's it going to take just to unlock small incremental changes that can make real impacts by unlocking more energy into the market? We talked about LNG and exports and oil exports. That's all great, but we want to get more energy into Africa, and to see the impact it will have, because the impact will be very quick and very real.
But thank you so much for your time, and thank you for being here.
It's been my pleasure. Thank you.